The scare banking nightmare, another piece of fear porn propaganda designed to make the government look good. Let's go. This article is one from news.com.au. I know what some of you out there are thinking. Amazing. This is going to be really insightful and educational. Unfortunately, no, it's not. I do a lot of these things just to expose how much you shouldn't pay attention to mass media. And I pick them apart because sometimes they can look pretty convincing, but then when you look at them after a second look, they're not very convincing at all. So this article is called Banking Nightmare Australia Nearly Faced During the Pandemic. So obviously it's designed to make the government or the central bank or someone look good. By the way, I watched that video there of Question Time. I don't know about you, but Question Time is like pulling teeth. That's who's running our country. So let's go. Australia could have been staring down the barrel of another global financial crisis if one thing was not done. Australia's financial sector was better equipped to deal with the COVID pandemic thanks to a suite of reforms introduced during the global financial crisis. Senior Reserve Bank of Australia official Jonathan Kearns told the Australian Securitisation Conference the reforms made the sector more resilient and avoided a nightmare scenario. Yeah, okay, yeah, he's an official, so he's got no actual name. Like, what does he actually do? Is he official? He's not an economist, because if an economist was talking, they would give us some facts, surely. So this is going to be another fluff piece. Had the financial system been as fragile as it was in 2007, the consequences of the pandemic would be much more severe. Instead, in 2020, our financial position is well positioned to absorb rather than amplify the pandemic shock. To that, I would say the pandemic shock isn't over unless you want to totally ignore the fact that we've got high interest rates and the impact of high food prices and high energy prices are about to hit home. The 2007 crisis caused by the collapse of the subprime mortgage in the US caused by Australia's unemployment rate to rise and economic growth to slow. But the nation emerged as just one of the few Western economies not to experience the recession. Thanks China, thanks massive surplus. Mr. Kearns, they still haven't said who Mr. Kearns is and what he does. Mr. Kearns said the post-GFC reforms and the public health shock being external to the financial sector assisted Australia's pandemic economic rebound. Well, it wasn't a rebound. Like, you've just thrown a lot of money at people. If you went out and asked the average guy on the street, they wouldn't say, oh, everything's good, everything's rebounded, my financial position's great. We also saw an unprecedented level of policy support in Australia during the pandemic from the national and state governments as well as the Reserve Bank and others. Well, that's the money printing. These actions helped to limit the initial downturn and restore economic activity. So this is what I want to say about having loose economic policy or a loose money system, and that is that governments can come in and create money and it will come to the rescue of the economy. You can just create money out of thin air. That's basically what happens. For this guy to say we would be in a worse position, well, it wouldn't matter because the government would just print more money. So he's just saying stuff here that he can't actually prove. That's probably why he's not saying he's an economist or he's an official in whatever capacity, because surely if you made claims, you'd be able to back them up somehow, but apparently not. Let's read on. During the peak of the pandemic, the RBA slashed interest rates to historical lows and cut the cost of federal borrowing and buying government bonds. But over the last 8 years, it has aggressively raised interest rates. 8 months, it has aggressively raised interest rates in a bid to curb skyrocketing inflation caused by the aftershocks of the pandemic and Russia. It's widely tipped the RBA will raise the cash rate again when the board meets next week. Mr. Kearns warned that a combination of rising rates and falling house prices would mean a number of people struggling to repay their homes was likely to increase. But he insisted the low unemployment rate and house prices remaining 20% higher than the onset of the pandemic would limit entry into arrears. Well, I don't know about it remaining 20% higher than the onset of the pandemic. and I've kind of got my ear to the ground because I pay attention to this stuff, obviously. For me, it feels like in Melbourne, we're almost at pre-pandemic levels. So I understand that might be different in other places. It might be different in Queensland. It might be different in WA and Adelaide. But for where most of the people are in Sydney and Melbourne, that doesn't smell right to me. What I want to say is that this is how an economic cycle works. One, you have a crash, the government lowers interest rates, they print lots of money. That's what happened at the start of the recession. The second thing that happens is that causes more borrowing because interest rates have gone down and more people invest, therefore the economy recovers. Unfortunately, if you create too much money, which is a hard line to follow, it's not an easy thing. I'm not saying it's easy for the RBA to figure out how much is too much and the government to figure out how much is too much, but it inevitably causes inflation because they need to make sure the amount of stimulus that they provide to the economy is enough, because if they don't provide enough, they're going to put themselves in a bigger hole. Now, what happens when you get inflation is that forces the hand of the central banks and interest rates go up. That means debt burdens increase and it forces businesses to lay off staff. And that's, I think, what we're going to start seeing in the next 3 to 6 months. This high unemployment rate or this low unemployment rate has just been fueled by massive money printing. I mean, they printed 20 to 30% of the money supply. It hasn't been done, I don't think, ever. So we're about to see the effects of that. So for this guy to say it's going to limit entry to arrears, I mean, where's his facts? Where's his data? Like, this is the Reserve Bank. It's clearly not the way they paint themselves out to be. They paint themselves out to be this whole, we know everything. Don't worry, we've got everything under control and we're pulling the levers. But once you dig a little bit deeper into this stuff, these guys don't have that much of a clue of what they're doing. They're guessing, and that's fine. We can't see the future and they're trying to manage a country. It's just that they dress it up so that we think they've got it. They don't. And that's my main point about doing this channel and doing these videos, is that you should take your own finances into your responsibility. To think that, oh, they're pulling all the levers and, oh, my super's fine, blah, 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 blah. It's not going to work, and it hasn't worked. We've had super that has been in place since the early 90s. I see your average everyday Australian super fund when they're 50 or 60. It's not working for most people. So take responsibility for your own finances. These guys don't know anything. Mass media BS is just mass media BS. Just ignore it and focus on what you can do. If you enjoyed this video, you might like the other one I did last week on the RBA scorched earth policy. If you like this content, please subscribe. I post about the economy, finance, property, and home loans. Cheers.